and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. And I've handed the conference over to Mr. Ashin Modi from Equirus Securities Limited. Thank you, and over to you, sir.
Hi, good morning, everyone. On behalf of Equirus Securities, I welcome you all to the Q4FY24 post-results conference call of Divgi TTS Limited. From the management side, we have Mr. Jitendra Divgi, Managing Director, Mr. Hivendra Divgi, Full-Time Director, Mr. Sudhir Mirijankar, Chief Financial Officer. So without further ado, I now hand over the floor to Jitendra sir for his opening remarks. Over to you, sir.
Yeah, thank you, Ashim, and a very warm welcome to all our investor friends. It's always a pleasure to interact with you through this session, and I look forward to an interesting and animated discussion. This time we welcome our new investor relations advisors, SGA, who will help us navigate on this journey as we go ahead. We have uploaded the presentation on the stock exchanges and our website, and I trust all of you have had a chance to go through it. So let me begin with FY24 performance, and we are going to talk about the achievements we've had, operations. My colleague Sudhir Mirijankar, the CFO, will also give a little bit of detail on the numbers as we go along. So, in terms of achievements towards fulfilling the vision that we have been working on, there were 5 or 6 significant achievements that we accomplished in FY24. First and foremost, we commissioned our plant at Shirwal near Pune in record time, along with the development of the design and the commissioning of a world-class manufacturing facility and infrastructure in this plant, with which we were able to introduce, genuinely speaking, India's first indigenously mass-produced EV transmission. This went on, the Tata Tiago as of last year, July, August of 23. But what is significant is post that we have developed 3 new designs within that short span. Once the first design was commercialized and launched. Side by side, we also launched at this new facility, first high-speed dynamometer for EV transmission testing, durability testing, but with which we can test all of our other product families as well. That is to say, manual transmissions, automatic transmissions, and our complete range of 4-wheel drive transfer cases. Also, we were able to successfully conclude the commissioning of our production lines for our new export orders, where shipments have started to the US and revenue will start in the next couple of months. This, of course, was backed up by the award of a new export business with marquee applications worldwide. And as we begin recognizing revenue from June, July, there will be new products coming on stream, and we will keep you informed. But as of now, on an annualized basis, if I look at the RFQ volumes, the value of that order is about 75 to 80 crores, depending on the volume that you consider. This includes 8 different part numbers, and the market includes geographies of Mexico, United States, Portugal in Western Europe. So this was what we, in terms of qualitative achievements, that we registered in FY24. Now coming to the performance in numbers, our revenue for the full year stood at 273 crores as compared to 278 last year, and which is dented by about 2% on a year-on-year basis. The demand from our major customers determines our revenue levels and operations, obviously, and our sales get directly affected. This is what happened in the last 2 years. There was an unforeseen slowdown in 4 of our major OEM, that is Mahindra, Tata EV, MG Motors, and Mahindra Defence, where we were shipping a new 4-wheel drive system for the Indian Army's armored light strike vehicle. So this was driven by various market conditions, different in each case, leading to sort of downward revision in production of units. So obviously, as we go ahead, we need to take this into account and plan our business recovery, taking this into consideration. So because of this, obviously our EBITDA was affected on the operating level, as was our PAT. But it is important to note that there was no cancellation of contracts with any quality related. In fact, our quality performance has been quite stellar, and EVs particularly, where this noise, vibration, harshness can really cause unpleasantness in a car. We have been 0 ppm, and we have the data to prove that. So while the qualitative performance was more than satisfactory, unfortunately the numbers don't back that up. But the important point to note is that we are fully geared now, and we need to figure out how to take on this volume challenge as we go ahead. It is interesting to note that we lost about 35 crores top line in the transfer case, and so it's not as if we had not anticipated uncertainty with our major customer Mahindra, but the EV business that we were working on since 21 was supposed to make up for this. That did not quite happen, although we did register from nothing to 24 crores. We were able to contain the damage to within 5% of our last year's revenue. Now coming to our near-term outlook for the next financial year, because that is going to be the natural question. The headwinds that caused this dent in the last 2 quarters, we expect that to continue for the first 2 quarters. But we have, as we have been reporting, a new export revenue. As I said, the shipments have started. We are filling up our warehouses in the US, and revenue the second half to drive our business again. So this year we will not see the full impact of the recovery steps that we are taking, and therefore it will be 8 to 10%. Our approach is to have sustainable growth driven by innovation in everywhere, in product development and manufacturing, and the way we approach the market, and we remain committed to it. I think in the Q&A session we can look at some of the details of this, as I'm sure you will have more questions. Coming to our new business order wins, which will support our long-term outlook. The orders we have won have a life cycle revenue of 900 plus crores. Of this, we have export business with marquee tier one North American, so not just one Borg Warner, but their peers as well. And we continue to work with them on more inquiries. So there are new business opportunities we are quoting on. A lot more work is under negotiation. And I personally was in the United States a couple of weeks ago to meet with these customers. The remaining, so that is about about 390 to 400 crores. The remaining portion of that is domestic for our core products and EV transmissions. So most of this will start in the second half of 25 as Mahindra brings in, for example, the 5-door car, and the full impact of that will be seen in FY26. So further discussions are on with new customers, as I said, in domestic and international markets for our existing as well as new products. And through the next 2 to 3 quarters, we expect conversions and then impact on revenue in FY26. So let me give you some concrete examples. We are looking at a global pickup truck with one of our largest OEMs. It has a carryover product configuration from an existing application. So the basic chassis is more or less the same. And since it's a global pickup, it has markets in Asia and Africa, outside India, where the need for four-wheel drive is much more. In fact, the four-wheel drive is indispensable for the success of the product. And we are fully tooled up on that. So this is one example. We are working to widen our electric offerings to include higher power, more torque products, and also for the three-wheeler market. So that application diversity will give some resilience and growth opportunity. So we continue to work towards, and the remarks I just made alluded to that, diversification of our revenue streams. That is through product and application and also customer and geography. So one of the areas, for example, that is under investigation is a front-end presence in North America to bring us closer to customers, both OEMs and tier ones, where a significant amount of business has either been won or is under discussion and negotiation. So this overall approach, we think, will also improve market share and wallet share with existing customers, working more, deeply. So not just, let's say, with the passenger side, but also commercial trucks. And as you may be aware, that we have had success in the commercial area as well. And once some of the government PLI issues get sorted out by the OEM, we will see the launch of those vehicles in the market and pulling the demand for our transmission products. We continue to talk globally to transmission tier ones. So not just in the United States, but also the leading tier ones in Europe, and I might add in Japan. In fact, I was in Japan in last month for 2 weeks, and a lot of interesting discussions with both OEMs and tier ones. The visit was hosted by the parts distribution company of the Toyota Group, with whom we have a long-term strategic alliance. And working with them, we are looking at opportunities both in India and Southeast Asia with Japanese OEMs. So to sum up, I think we have not let up on the work to bring the company back on the growth trajectory. The strategic framework and focus of technologies and products that we had remains intact. And I think this product application diversity and customer geographic diversity and the push to create and sustain that, I think gives us resilience. My sense is many of our peers may not have withstood the kind of shocks that we have over the last 3 to 5 years, whether it was COVID, the Ukraine war, the geopolitics with China, and the sudden onset of headwinds we faced with 2 of our customers. So I continue to remain optimistic about how we are doing. Obviously, there are more questions this time, and we would be happy to answer them. So let me conclude here. I want to take the opportunity to thank all of you. And I'm going to hand over the proceedings to my colleague Sudhir Mirjankar. But I look forward to your questions, and subsequently, if there are any clarifications needed, our investor relations advisor SGA is also available. So with that, let me conclude my opening introductory remarks and hand over the proceedings to my colleague Sudhir Mirjankar. Sudhir?
Thank you. Good morning to all. Speaking of the financial performance of Q4 FY24, revenue from operations for Q4 FY24 stood at rupees 65 crores as compared to rupees 73 crores in Q4 of FY23, lower by 11% on a year-on-year basis. It was marginally up by 3% on quarter-on-quarter basis. EBITDA for Q4 FY24 stood at rupees 13 crores as against rupees 19 crores in Q4 FY23. So year-on-year degrowth of 31%. It was up by 3% on quarter-on-quarter basis. So EBITDA margin for the quarter stood at 20%. Profit after tax for Q4 FY24 was rupees 9 crores as against rupees 13 crores in Q4 of FY23. So year-on-year degrowth of 31%, and it was down by 1% on quarter-on-quarter basis. PAT margins for the quarter stood at 14%. Speaking about revenue mix, the transfer cases business has seen degrowth of 36%. This largely due to slow pickup of our units from major OEMs. Our EV transmission business did exceptionally well and has grown by 160x on year-on-year basis. Coming to FY24 performance, total revenue for FY24 stood at rupees 273 crores as compared to rupees 278 crores in FY23, lower by 2%. H1 was good for us, but in H2, change of production schedule at OEM side resulted into lower production and sale for us, impacting the revenue. EBITDA for FY24 stood at rupees 53 crores as against rupees 74 crores in FY23. Year-on-year degrowth of 29%. Fall was due to high overhead expenses on commissioning of Shirwal plant and suboptimal capacity utilization at other plants. EBITDA margins stood at 21%. Profit after tax for FY24 was rupees 40 crores as compared to rupees 51 crores in FY23. Degrowth of 22% on a year-on-year basis, with tax margins at 16%. Coming to revenue mix of FY24, then the transfer case business has seen degrowth of around 20%, which is our product portfolio. Its degrowth impact was offset to larger extent by pickup in EV transmission business, which grew by 120x from negligible. EV business now contributes around 10% of our business. We will continue to diversify our revenue stream going ahead by way of expanding our product portfolio and its application. Some of the other key financial metrics for FY24. As you all know, we are net cash company and we will try to maintain it going ahead. Our current net cash position for FY24 is rupees 225 crores. The return on capital employed for FY24 is at 9.3%. Return on invested capital for the FY24 is at 11%. Both the above metrics is expected to improve as operating leverage will start playing out. Out of the IPO proceeds of capex of rupees 170 crores, till date we have deployed rupees 45 crores and capex spent for FY24 was rupees 78 crores. Finally, to conclude, the Board of Directors at its meeting has recommended final dividend of 2.60 per share of face value of 5 each for FY23-24. It is subject to approval by members at AGM. That's it from my side. Now I would like to open the floor for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question comes. The first question is from the line of Samir Panke from Centrum Broking Limited. Please go ahead.
Yeah, thank you for the opportunity. The first question is on data. Would you like to share the volume data?
Sorry to interrupt you, sir. May I request you to use the handset, please?
Yeah, I'm using handset only. Am I audible?
Yes.
Yeah. So would you like to share the volume data for all the segments that we operate in for FY24 and FY23 comparable numbers? Number of units on transfer case or next track or synchronizer, simulates, components and electric vehicle transmission.
Yeah, I think there should not be a problem in looking at Hello, can you hear me?
Yeah, I can hear you, sir.
Yeah. So I think what I suggest is if you can get in touch with SGA,
okay.
We can coordinate the and make sure this clarification is provided. I don't see a problem.
Okay, yes, sure. In the conference call, we have guided for at least 20% YOY growth in FY25. And I think in recent 3 months, we have halved the guidance for FY25 to meet the 10%. So would you like to throw more light? You have in your opening remarks narrated that there has been a reschedulment, but any other thing that in 3 months it has changed substantially, which you were not aware of, possibly not having info on as on February 24?
Yeah, there is a lot of static on the line, but I think let me rephrase the question and make sure that I've understood it. You're saying that against the previous remarks we had made regarding CAGR, our growth prospects for this year are being set, and you wish to know, whether there are factors, that we know or don't know that affected this, and what are some of the other factors that are bearing on our market prospects. Did I understand that correctly?
Yes, sir.
Yes, thank you. Yes, actually we have to be careful in how we respond to questions of this nature, so that we do not transgress beyond the limits that the regulations put on us. But suffice it to say that we have a lot of sort of data and analysis in our long-range planning. Our typical long-range planning process has a budget for the ensuing year plus a 4-year planning horizon beyond the budget year. And this structure is put in place about a quarter before the year starts. So by December, January in a year, we pretty much have the planning horizon of the ensuing year as the budget year, and 4 years beyond that. When we look at our numbers, and what is happening is every month there is an LRP review process where we are looking at the forecasts relative to the budget and then critically assessing at least the first 2 of the out years. There is a systematic process in place. That's the first point I wish to make. Further, our analysis of the work is put into 3 buckets. Steady state operations, that business that is earning us revenue, inquiries that are in the bucket of development and launch, and then opportunities that we are pursuing with respect to RFQs and stuff that is under negotiation. So none of our sort of guidance figures or whatever we talk is outside the scope of these 3 buckets. In other words, we do not give a forecast based on some wild blue yonder aspiration that we may have in the company. So it's conservative to that extent. And what I wish to say is that based on the work, this kind of work that we are doing, we are still reasonably optimistic, okay, that we can pull the company back on that track of that was, you could say, promised by us. Now, what are the factors that have tempted us? I think it's important to appreciate this, and also bear in mind what is the strength in the company to counter these headwinds. I am fully aware, as is our team, that one of the legit criticisms of our business model, that there was perhaps an asymmetric dependence on a customer with a certain product line. But the fact also is that in 2021, so this is before the IPO, we had been awarded India's largest EV transmission contract. Export businesses were under negotiation with customers. And of course, never forget that we had a very large contract at that time in Russia. So our overall approach to handling this asymmetric dependence on any one customer was, I think, more than substantively addressed by the company. Now, what we have run into is a rather unfortunate and tragic confluence of, you might say, a perfect storm in the market. The geopolitics hit our China business, Russia business initially. Of course, the whole China factor is now helping us in the United States, but it's taking a little bit of time. And the EV business, which we executed from award to launch, we did it in 18 months. And if you consider the fact that when we won the award, we didn't even have a facility, and neither did, at that point, we just had a design of the product. So in 18 months, we essentially executed. And if you look at the track record of the since last July, where we have shipped 21,000, we have 0 ppm on NVH, and because of some handling damages, there have been 1 or 2 issues. we still have a ppm which is below 100. It's actually at around 50 ppm on a brand new product just launched. Now that, I can tell you, ladies and gentlemen, is an enviable quality record to have. Forget India, globally. So we should be justifiably proud of that. So what I'm trying to say is that this is the outcome of the capabilities that we have built in the company. And it is exactly this that will enable us to go forward. If I look at my FY26 long-range plan, most of my projection for FY26, this is important to note for the audience, is coming from business that has already been awarded and it's already earning revenue right now or is under development and launch. So we hope to have the last loose ends tied up by the end of this calendar year, towards let's say by Diwali, and the occasion of our quarterly calls will give us the opportunity to give you updates on what is going on. So we are holding ourselves, in a manner of speaking, accountable to this. So when we give you some sort of, I know it's not very quantitative, but qualitative guidance and in terms of how we are responding to this difficult market situation, it is based on substantive data and facts, that we are looking at. We understand that speed and agility are now very, very critical. But I think up to now, my sense is we have sort of weathered the storm okay. We could have done better, of course, but it could have been a hell of a lot worse as well. So as we go along, we'll continue to update you. But suffice it to say that for FY26, it will be a little bit of improvement in the four-wheel drive business, a significant improvement in the electric, and a considerable improvement in our exports. And this, we think, will be what will drive our recovery here onwards.
Yeah, thank you. So one more question on electric vehicle transmission. Would you like to share a status of Punch, because we started the supply, how the shipments are on Punch, and second, status on the Nixon?
Yeah. I'd be happy to answer that. I should also say that so we are working on 3 designs. Okay, the fourth one that we have is 3 designs at Tata, and the fourth one is at Mahindra. There's a 5th one under development for 3-wheeler applications, but that's still in the early days. So the first design we have is going to be used on the Tiago and Tigor. The Tigor model currently still uses some residual imported inventory, but we have indication that our current system will migrate onto that. So that will add to some resilience. On the Punch, there are 2 models. One is called the medium range, and the other one is called long range. So we have the medium range design successfully developed. It's a sort of lower cost version of the Punch. It's doing very well. The numbers are a little disappointing, let me be honest. And we think that has happened because in this segment, the market seems to have slid to the higher trim levels, the higher power options, because people, I suppose, in keeping with that spectacular design of the Punch, also expect equally exhilarating motoring experience, which is what the new power, the higher power configuration is capable of delivering. That is not to suggest that the MR performance is not exhilarating. It's just relative. Also, I think the LR, as it's called, has a longer range, and perhaps we are seeing a little bit of the market going towards that. So the answer to your question is the punch has been launched in the MR segment. We have an excellent delivery quality track record. I'm very pleased to tell you that, which is unusual in making EV transmissions, that our first pass yield on the assembly line is virtually at 100%. I mean, it's upwards of 98, 99, and in some weeks it's at 100%. So that I think is significant to note. For the higher power, the product is under development. The first set of results we have on testing are very, very encouraging. I mean, in the development, the very first units have significantly exceeded the NVH standards, and this I think is a testimonial to our engineering and development capability. So with the commissioning of our equipment in Shirwal, we have the capability to quantitatively measure and report the noise, vibration, harshness standards, and these standards now have been calibrated with vehicle performance, and therefore we can state with utmost confidence that having exceeded those acceptance standards, we have the assurance of right first time when this product goes into launch. So that is the current status. We have a similar experience. The development and launch of the Mahindra eG4 was done in like 4 months. That was the kind of speed we brought to the program. We are waiting for some PLI issues to get sorted out with the government of India, and once that happens, this program will go into launch. It is fully tooled up, and I think we have won a lot of appreciation and gratitude from Mahindra management for the manner in which I have no hesitation in saying this for the manner in which that program was managed and executed.
And next one part of the business?
Yeah, that's what, as I said, that product is, when I said the higher power configuration, that gearbox goes on both the Punch LR and the Nexon. That is the one where we have, the prototypes have been successfully developed, and we are now going ahead with the commercialization.
Yeah, okay. And the last question from my end, on the margins, would you like to share any outlook for FY25? FY24 we have seen 20-21% range on a low operating leverage.
Let me say that we were obviously very disappointed with their EBITDA. We knew that it will take some time for our investments to bear fruit in terms of the return on invested capital. Historically, if you see, we have had spectacular ROIC numbers, and we are in a phase where a lot of investment is going in to sort of bring the muscle for expansion and make the business more resilient. Also, some of our legacy businesses had manufacturing infrastructure that was sort of completely outdated. We needed to invest to modernize and improve productivity. So the commitment of the company is to sort of maintain EBITDA above the 20% range, and ROIC, all our quotations, everything is done to achieve minimum ROIC of 18%. The risk, of course, is in the volumes on the ROIC, but at a unit and project level, we also have focus on the contribution margins and EBITDAs. Okay, so that should answer your question.
Yeah, thank you. That's all from my side.
Let me just further qualify, perhaps this will give you a better appreciation of how we manage operations. I have Deepak Vani with me as CEO. Maybe he would like to make a few remarks on what are the 4 KPIs we use in operations.
Yeah.
So I'm just finishing out that answer, please. Yeah, go ahead, Deepak.
Okay. So the first and foremost KPI what we monitor for our internally as well as for customer is on-time delivery. Then the customer PPM and internal PPM. Then for productivity we track progress in terms of revenue per employee, and so the fourth one, what we track on monthly basis is cost reduction. So these are the 4 KPIs what we track on month-on-month basis.
Yeah, thank you. That's all from my side.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question.
Hello? Am I audible?
Yes, please, go ahead.
Sir, you sounded very confident on your export business, doing exceptionally well. So I have 2 questions regarding it. How are you seeing domestic export business mix for, let's say, 2-3 years down the line? Is export a high margin business for you? And related to it, which is a low-hanging country for us in terms of exports? Like, what's the competition landscape there in those countries?
Excellent question. Thank you very much for that question. May I know your name, please?
Kunal Shah.
Kunal Shah. Okay. So, obviously, as time goes by and we see a greater amount of globalization happening with the maturing of Indian industry, the competition, my sense is going to increase. However, the areas that we compete in, so for commodity stuff, exports I think is going to become a pretty brutal affair. But the areas that we operate in require sophistication on many dimensions. One, of course, is the product design, the metallurgical science in the steel and materials that we use, the sophistication in the financial modeling that is required to handle a complex, uncertain global environment, the sophistication in project management, because these programs are pretty complex and require the successful integration of diverse knowledge streams. Right? So because of this, through the service aspect and the actual manufacturing aspect, we bring a bundle of some sophistication. Now, when it comes to actually delivering a proprietary product, the margins are, of course, the best. But even otherwise, at the component level, compared to the domestic business, there is no doubt that overseas business brings decidedly a better margin. And I think the proof of that is if you look at our data historically, it clearly shows that. And we have the data from 2010, till now, that shows this. So, of course, it depends on how skillfully we are able to negotiate our contracts. And there are also segments in the marketplace. So, for example, in North America, in addition to the high volume business with the OEMs, there is a significant aftermarket because you have to bear in mind that the United States produces something like 13 to 15 million units a year. And so in size, I mean, if you go back 10 years, that's a huge number out there in the installed park, as they say. So there is a significant aftermarket, but the United States has many other segments: commercial truck, it has a recreation industry, there's a complete off-road utility area, which is where I would ask analysts to pay attention to what Mahindra is doing with its Roxor model in the United States. It is a product full of a lot of promise. And Mahindra is really the only player today which has an automotive product from India available in the United States market from a B2C kind of business model. So that is one of the reasons why we want to be close to the Mahindra operation in North America, to be able to innovate and create new options on that platform. And if you operate in areas like this, that's where the margins are even more, because the volumes are modest, and that's when it becomes difficult for these high-cost economies to service those segments effectively. And that is where I feel Indian companies have a decisive advantage, mainly because I think of the language, culture, and the engineering sophistication that has to be brought. And that's where I think we have an advantage over Chinese companies.
Okay. Thank you for the detailed answer. That's it from my side. Thank you.
Yeah, I just want to clarify further that the proof of India's competitiveness also lies in our ability to compete in the Chinese market. Tragically, because of the current geopolitics, which I don't think will cool off anywhere in the near future. In fact, if you go by the comments that have come from the latest CII conference from the foreign minister, it appears that we're in for a kind of a longish Cold War and sort of muted trade. But our hands-on experience, because still this latest round of geopolitics exploded in our face, Divgi TTS, or as Divgi Warner, had an unbroken track record of exporting to China from 2001, till 2020 or 2021. And so we are figuring now how to get back into the China marketplace. I want our audience to appreciate that the China market is double the size of the United States. It hovers between 25 and 28 million units a year. There are OEMs in China that are twice the size of the entire Indian industry. And therefore, there are industries and segments in the China market that if you are good at your game, you can export and do business in China as well. We don't necessarily have to buy the line that the Chinese are so competitive that they have to always have a trade surplus with India. It is quite possible for Indian companies to compete and sell in China as well.
Okay. Thank you.
Thank you. The next question is from the line of Mahesh Pendre from LIC Mutual Fund. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, on the presentation on page number 14, we have given that the orders we have received awarded on a particular date and tentative productions. So, I mean, for example, like this serial number second, HVB reduction 007. This has been awarded into August 24, and tentative production is on 4th of August 24. Anything wrong in this?
Yeah, you're referring to 007, right? Correct. Yeah. Let me tell you, the 007 is going into it's a manifestation. So actually, the 012 and 007 were awarded more or less together. We have already made shipments on the 012. invoicing and therefore revenue recognition will happen from next month. We have already made 2 container shipments, I think. 012 goes into a plant in the United States of America.
No, sir, I'm talking about the date it has been awarded, right?
Yeah, let me. No.
Announcement in August of
23, and you're saying why SOP is going out to 24. That's the intent of your question, right?
No, awarded on 24, right? So August 24, something wrong in the, awarded last year back, right? Last year.
Mahesh?
Yeah.
Are you referring the revised PPT?
Yes, in revised PPT also.
Revised PPT says August 23
announcement and SOP of August 24.
Yeah, because I have downloaded the same, but it's still showing. I don't know what's wrong with this.
Yeah. It was awarded in 23, Mahesh, and it will start revenue in 24, August 24.
Okay.
So that's the correction you need to take into account.
No, but I have downloaded the same. Revised only.
No. That the file was loaded the old version. So if you see the revised version again on the exchange, you will find that.
Okay. So this is wrong.
Yeah. So you need to correct it. August 23 is the announcement, and SOP is August 24.
Okay, sure. And sir, the last 4 quarters we have been reporting degrowth now. Now we are talking about 10% growth next year. So essentially next year, this FY25, our revenue will be similar it was in 2023. So we we're 2 years behind to what we are supposed to. So in this situation, 25, 26 you said, so what kind of growth rate one should expect in FY26? Given what we have done in the last 2-3 years.
Yeah. If you recall in my opening remarks, and even in answering some of these questions, I said that we look at the projections and the guidelines we are giving is based on 2 buckets of opportunities we look at. One is what we call supply and support process, which means steady state operations. And the second bucket is stuff that has been won and that is under development and which we are pushing into production once it is successfully developed. So all the forecasts that we give are based on this. What can happen is events there can be internal causes and external causes. What has happened in our case is all the causes are external, not internal. So when I look at FY26 and I look at 26 and 27 and I look at my develop and launch bucket of opportunities along with the current opportunities that are revenue yielding right now, I feel, the conclusion that, it's not a feeling, it's a conclusion of our analysis, that we will pretty much get back on the track of 15% CAGR.
But sir, earlier we were talking about, some 1,000 crore of revenue in the next 4 to 5 years. So does it change? There is a dramatic change in what we were earlier saying and now we are talking about.
No, I commented on 26, Mahesh. I did not talk about next 4 to 5 years. So next, I would say, if I look at our plans till FY28, it is still in that direction. It has not changed.
Because sir, here the problem is that we understand that every company goes through a difficult time and many things can come and hit. But the problem is the communication. In the month of probably last con call, we were talking about 20% kind of growth this year, and suddenly we came back to some single-digit growth. So this is where I think some fine-tuning is required in terms of how we communicate to shareholders.
So I think going forward, SGA will help us do a better job of that. But I can assure you that, if you look at as I said, in FY24 particularly, there were four. I mentioned when I opened my remarks that there were four OEMs where unforeseen things happened. First was at Mahindra itself. Second was, the records clearly show that we had, even when the headwinds hit, the forecast given to us was 70,000 units. We had discounted that to around 55,000. And what actually came through was only 21,000. Now, this could not have been foreseen by us. And there was no reason at that point in time to suspect that what Tata was telling us, that the forecast would get dented to that extent. So, which is why we were confident that we would do significantly above 300 crores. Please bear this in mind. That does not mean that this market potential and what is out there has disappeared. Certainly, if you talk to Tata, and they are also banking heavily on the TPM prospects. And if we are right now their single largest, biggest transmission maker, surely there is some substance to this story. So, I think the verdict is still out on this. We should be a little patient and wait for the further development and announcements that will come over the next quarter.
But sir, the weakness in our core business of transfer is really surprising and shocking, the way it has reported degrowth. So, are we aware of this kind of stuff is going to,
No, we did not expect MG to let us down so badly. The MG, we were expecting about 25 to 30 crores of business. Part of and at that time, there was no reason to suspect that they would run into this kind of headwind. They are based in Halol, Gujarat. There was everything to indicate that despite the geopolitics, that since they were already an incumbent and had come in, but it was not to be. And we could not have known at that point in time. Again, from award of business to launch, we did it in 12 months. I mean, even by Chinese standards, that was very, very fast. And of course, if you talk to MG top management, they will tell you that the way we executed this project is a case study, of engineering and development excellence. So there was no reason to suspect that we would get hit it's just that the market conditions suddenly came about in that fashion. We were, you could say, a little conscious of that the exposure at Mahindra was a little asymmetric, but that is why the work development on the other areas was going on in EV, in exports, and the market just came at us faster than we could develop the alternatives. But that's not to suggest that the alternatives were not there. So I think I understand your disappointment and sense of agitation. But that is the reality. I think my request would be you look at what is the company doing? Does it have the attributes to now counter these headwinds and have a turnaround story? I think beyond that, I cannot say anything else at this point in time. But we'll see to it that in terms of communication appropriately, we improve as we go along.
Sure. I think, sir, we need to deliver probably 3-4 quarters next time to show some consistency in terms of delivery, and that will bring back the confidence of shareholders. But just wondering, you indicated that the first half will be soft, so it will take time. So, in meantime, are we expecting any new orders to come up from the clients, or anything like any venture or any partnership we would like to
Yeah, I think there will be.
You mentioned that you went to Japan. So is there anything we can expect from company to form some kind of relationship with the international players and the opportunity you are talking about?
Yeah. So as I said, we already have a strategic alliance with one of the largest companies in the Toyota group. With that relationship, we have managed to unearth a lot of inquiries and opportunities in the global universe of Japanese OEMs. Okay, that is a fact. Question is, will that convert into awards in the next month or 3 months? I wouldn't like to speculate on that, but there definitely will be we are looking forward to a couple of announcements in the next quarter in terms of in the general direction of the vision of our business, and that is new technology and also new markets. So please bear with us, and as we go along, you will see those updates. New business wins plus a combination of business wins and technology awards. You will get that.
Thank you. Thank you so much, sir.
Thank you. The next question is from the line of Ashin Modi from Equirus Securities Limited. Please go ahead.
Yeah, hi, sir. So, sir, in our opening remarks, we talked about venturing into the three-wheeler side. Could you give us some color over there, because it seems to be a very big market, and where are we in discussion with, and how are we in terms of product readiness?
Yeah, I would say that there are two broad segments, Ashin, in that area, in the three-wheeler. One segment is populated by very strong brands of incumbents. It could be a Bajaj, it could be Mahindra, it could be Piaggio, the big brands. So we are working with one of them. On this, the numbers are pretty significant. I mean, they go at some point in the life cycle, they cross the 100,000 mark. So that is one area that we are pursuing. The other area is dotted. That landscape is dotted with really lean and mean startups, and that is where innovation is rife. This area also includes small, recreation ATV manufacturers who use three-wheeler type powertrains to drive these. You could call them dune buggies or ATVs. And one of the areas that has suddenly emerged is the possibility of Indian companies assembling these vehicles using the three-wheeler infrastructure in the country to export these ATVs for utility and recreation purposes globally. Okay, and we are working with companies in this area. This area is also dotted with a lot of I would say feverish activity of startups in the powertrain area. And so what you have is a very heady cocktail of consulting vehicle engineers, startup vehicle making companies, and startup powertrain companies. And this is like a cauldron that is brewing. Okay. Now, who are the winners that come out of this? Time will tell. But it is one of the most exciting areas in India right now. And given the design capability that we have, what startups need is the ability for companies like us to bring in standard designs with which their time to market is assured. The development period is cut down, the prospect of a right first time is assured, and then you have the capacities needed to support them. And because they don't have the time to do and the resources to do a ground-up development. And this is the space in which I think it's a little amorphous and constantly changing and evolving. So if you put a finger on a number, in 3 months it will be outdated. This is what is happening. Then of course there is a little bit of overlap with the two-wheeler makers. Because some of these powertrain guys, motor, inverter startups are able to service both the two-wheeler and the three-wheeler. So it is a fast-moving target, and the area which is most difficult for these people to pin down is actually the transmission, because the investment that is needed, the experience and the knowledge of the material science, the heat treatment, the ability to engineer NVH-free systems, this is at a premium today. This is our sense in the marketplace. So I can tell you that in the three-wheeler segment, we are working with all the stakeholders there. We are in touch with the vehicle engineers who are advising these companies. They are also doing pilot production for some of these OEMs. We're in touch with the powertrain makers, and we're also in touch with the guys who are making the ATVs and the UTVs. UTV stands for Utility Task Vehicle. And it's just a two-seater with some kind of a utility carrying capability. A lot of it is off-road. So they need four-wheel drive, electric four-wheel drive systems. Now, all of this activity that is unfolding is not reflected right now in our budget and long-term plan. But as and when things crystallize, we will be able to sort of streamline it and dovetail it into our business. That's the current status. I hope I have answered your question.
Yeah, sure, sir. And sir, my last question is regarding, where are we in terms of our investment cycle? What sort of a capex we expect over the next 2-3 years?
Yeah, I think Sudhir alluded to what has been utilized and what is pending. The reason is we are timing the development of a lot of our new products and the injection. Okay, this is a bit of a dicey thing because we don't want to prematurely over-invest. We want to make sure that investment is synchronized. It is done in a thoughtful manner without exposing the company to undue risk. A little bit of upfront investment, that proactiveness has to be there. One of the complications is this EV wave across the world has extended lead times on some of the equipment, which is the other challenge we are facing. And many of these high-tech machines are not available in India. They have to be imported from Japan, Switzerland, Italy, or Germany, and some also from France. So, and the lead times there have gone beyond conventional lead times that the industry was used to. So it's a little difficult to sort of put a finger on. We have, of course, broad plans. You have to understand where the focus is. Export business, EV. We are continuing to monitor the four-wheel drive business, which of course has a connection with the component business, because a lot of the components we export are components of our four-wheel drive products. That connection you must make. We continue to monitor the manual transmission space because that is an area where the OEMs are letting go of a lot of, and there are discussions underway of how that will evolve strategically over the next 3 to 5 years. Those discussions are going on with many of India's big OEMs. When I say Indian OEMs, that is our Tata, Mahindra, Ashok Leyland, Eicher maybe. And then of course the elephant in the room, if I may say so, is automatic transmissions. And there has not been much of a question in that area, but I can tell you that that is, according to our assessment, still the hottest area for us. No one company has the wherewithal to embrace this segment. I mean, even the likes of the world's biggest tier ones, I don't think have the stomach to take on the challenges of the Indian market. So it is going to require a deep collaborative effort, and those companies that bite the bullet on figuring out how to, I think, will reap the dividends of the risk they take. So the point is that the automatic transmission business also awaits investment from us.
Thanks.
Thank you. The next question is from the line of Karan Kokane from PGIM India AMC. Please go ahead.
Hi, am I audible?
Yes, please.
Yeah, hi sir. So just a few clarifications. So you said FY24, FY25 growth will be around 8 to 10%. Is that right?
Yes, that's what we said.
Okay, and sir, can you just give a broad indication of the growth between say transfer case and EVT for 25? Would that be possible?
I think we overall, I would say we are a little more optimistic on the EV transmission than on transfer cases.
Okay. And sir, I just missed your FY25 growth guidance. How much was that?
No, 25 you said 8.
Sorry, FY26.
26.
Yeah, 26. Sorry.
Yeah. No, 26 I didn't answer that directly with the number. All I said was, if I look at the contracts we have in steady state operations and the contracts we have that are under our develop and launch process, I said that gives me the confidence that we will pull the company back on the 15 to 20% CAGR trajectory.
Understood. And on margins, you said 20% plus is what you want to maintain, right?
EBITDA.
EBITDA, and this is excluding other income, right?
Yes.
Okay.
On the operating business, that is our goal. See, what has happened is, if imagine where we are, if all the additional business, imagine we had a little 20% more in Mahindra. Tata had promised 70,000 units, even if it had been 55,000. The entire contribution margin out of this business would have gone to the bottom line, yeah.
Understood.
It would have made a huge difference to the EBITDA. So please bear that in mind.
Yeah, and sir, I just missed the capex numbers for 25, 26, if you will.
Yeah, so 25 capex. We come back to you. I don't have that number readily.
Okay. Those were my questions. Thanks and all the best.
Thank you. Ladies and gentlemen, we'll take this as a last question. I would now like to hand the conference over to Mr. Jitendra Divgi, Managing Director, for closing comments.
Okay. Once again, I thank all of you for giving us this opportunity and appreciate the critical questions that you asked. I look forward to these sessions very much. It gives me the opportunity to understand, what is on the minds of our investors, how we are aligned generally with the market, and actually it's a source of great value, I feel, for the thinking that goes on in our business. So I cannot thank and appreciate this enough. So thank you very much again. Just bear in mind that the basic integrity of the story is still in place. That's what I wish to assure you. And the 4 quadrants that we were looking at of our legacy 4-wheel drive business, the manual transmission synchronizers, EV powertrain, and automatic transmission. That story, we have not given up on it, and I look forward in the next couple of quarters to give more substantial updates in this space. So let me conclude here by once again thanking all of you for your time and interest. Thank you very much.
Thank you. On behalf of Q4FY24 Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.